Hi guys, good morning. So this is chapter 22. Let's deal with this. So now we're really talking about chargeable gains for the company. So you can see we seemed to spend a lot of time, as you can imagine, looking at chargeable gains for the individual. Everything ranging from the principal property residence to letting relief, to dealing with shares, dealing with entrepreneurs relief, to dealing with gift relief, to dealing with rollover relief. So a lot of concepts that apply here as well. Some of them, especially rollover relief and things like that, but and shares. So let's run through this and get this out of the way. Big point with the company, of course, is this big issue of indexation allowance. Remember that companies do not have an annual exemption. Their chargeable gains get taxed at corporation rate. So really, what we have is a picture where we find the gains as normal, but we deal with, if you like, the inflation, but indexation. The key date to think about is December is 2017. So all indexation stops by this time, and so no more indexation is considered to have occurred. So let's look at exactly the same process if you're trying to find out what the gain is, but this time we're including this question of inflation. So this is the pro forma, but again, I'll teach it conceptually, but then I'll go back to the pro forma so you can see what's happening. Right, so what do we have? Here we have, exactly what it is. You would have sold something or whatever it is. Those are the proceeds. Of course, there are any incidental costs, any legal fees, or any advertising fees or selling fees. You would deduct those from the actual proceeds, and then you'll have the net proceeds. And then you would have the total costs so far, but you would inflate them, bringing them to their next you would inflate it from the day of cost to the day of sale to make sure the full inflation was in there. So you can see there that you kind of deal with the indexation. We'll see a question in a second. So you can do it this way, and then you'll have the unindexed gain, inflate that based on what it is that you're working with, and then you'll know what the net chargeable gain or loss is. So let's jump into a question. I've talked about this idea of indexation. So indexation cannot create a loss. That's the first thing. So it's important to make sure you deal with those things separately. So I think just conceptually, I think it's important if you see exactly what's going on here. So you have here, let's deal with the costs first. Why not? And just watch these. These can help you and just guide you. You can pick which ones you need. Remember that this will be relevant. We are not looking at anything past December 2017. Right, so those are the costs. So what do we have? It says that he bought an office block on the 1st of May for 215 to 93, 215,000. Incurring additional costs of 6,700 on the acquisition. So this happened altogether, is what they're telling us. So I will add on 6,700 here straight away, which gives me 215 plus 6,700 is 221. 700. Okay, great. And then it says on the 29th of July 1995, they spent. So sometimes you might, it depends. It's working with what you have. You might have had, who knows, a May 93 to July 95 indexation factor, and you could have taken this all the way there. But you can see that from the information they've given us, you don't. You literally have this thing up till the well, you would have had that with shares, but you can take, it's just inflation. You can take that, this is 93, and then you can see that May 93 goes away to December 2017. So I can now find the inflated cost. This is the inflation on this thing up till the day we actually sell it. If you remember, it says that it was sold on the 31st of August, December 2018, but indexation stops at 2017. So in terms of cost, I will inflate this. So I can find the inflation on it, which is 0.971, but which is really in effect taking this and then adding it onto it, isn't it? Which, if I'm taking this and adding it onto it, I might as well just multiply this 221,700 times 1.971. I'll do it both ways so you can see what's going on. So 221,700 times 0.971 is here we are, 215,270.7. So I can call that, I'll just round that up to 215,271, which in effect brings me, I'll add the two things together, plus 221,700, and that's 436,971. Right, so I have that. So that's my full cost with regards to the actual purchase. I'll have that and I'll keep that. There you are. Then I now have my, it says I spent 46,100 extending it. So if I spend 46,100 extending it, I'm going to do that here, 46,100 extending the thing, and I extended it on the 29th of July 1995. So that takes me July 1995 to December 2007, which is in effect that times the inflation on it, which is 0.865. So I have 46,000 times 0.865, which is 39. This is 39,790. So I add this on, if you like, to this, and I have plus 46,100, and I have 85,890. So both of these key costs I have now inflated up till the date of, well, technically the date of inflationary sale. That's when I can then sell both. Now it says here that I sold this thing. I'll just change my pen color. It says that I sold this thing for here we are. Sold it for 695,000. So here we are, 695. So sale 695,000. I believe there were some costs. We had to pay whatever, some incidental cost, 7,500, I believe. Well, let me just check that. Yes, 7,500, which gives me net cost 695,000 minus 7,500. They are 687,500. Right, and then you have that. So that's the sale. So now I take away both these costs. I'll just come back to my red pen of 436,971 plus 85,890. These two together are the full costs. 436,971 plus 85,890, which is 522,861. So I take this away from, of course, this, and that will give us what our net, our real gain is on this asset, 522,861, which gives, 687,500 minus 522,861, which is 164,639. So what have I done? My key aim here, my goal was to make sure I took my cost, if you like, and just basically inflated them to make sure I got the real cost, as you would expect for any dealing with any inflation. Got the real cost by December 2017, and then I could deduct that from, if you like, what we actually sold it for. Cool, great stuff. So let me just take you back to the actual layout of this now, so that in a way you kind of see what's going on. Oops, sorry. Yeah, here we are. So we have. So that's that. That's what we were doing there earlier on. That's the cost, and that's the 221, and then you had the enhancement. Basically, those are the inflation indexes applied to the cost, and then you have those two things kind of coming off the eventual unindexed gain. So how we should do is get your proceeds, get your kind of net disposable proceeds, have both your costs, all your costs, deduct all your costs from the net proceeds to get your unindexed gain, and then apply that. It doesn't actually matter. Imagine you're doing this in section 1. It's understanding what's going on to be able to move quickly, and then start fancy layouts. If you're doing a section A, no one's asking. You can make it move that way really quick. Okay, great stuff. Yeah. So what I'll do is I'll pause this video and then we'll just carry on. I'll do them short, so you can do each. We'll do each example in each video, maybe 2. Cover it that way. Okay, I'll see you in the next video.